Hello and welcome to the Finance Quarter. I'm Andrew Robertson. The start of the new financial year, of course, means it's time to get our tax returns in. But if you're like me, filling in a tax return is only slightly less painful than going to the dentist. So how can we make the tax return experience as pain-free as possible? A woman who knows is Australian Taxation Office Assistant Commissioner Elaine Anthony. Elaine Anthony, what are some of the most common mistakes you see in people's tax returns every year?
Andrew, it could be as simple as people getting incorrect information around their name, their date of birth, their bank account information, right through to forgetting to include various forms of income, incorrectly claiming deductions, and in some instances claiming tax offsets that they're not entitled to claim.
So is the message from what you've just said to take care and to pay attention to detail as you're filling in your tax return?
Look, there's a couple of things there. First of all, we have a lot of information that's available on our website, particularly in relation to deductions and what you can and can't claim. And the second thing is when you're ready to submit your tax return, just have that one final check to make sure that all the information that you've provided is correct and you haven't forgotten anything.
What type of things in a tax return catch the ATO's attention and trigger a closer look at somebody's finances?
Look, it could be where we see large refund claims or where we see large claims for deductions, and on occasions it could be where we have reason to believe that somebody could have stolen someone's identity and be putting in a fraudulent return.
Are there things in tax returns that the ATO will be paying particular attention to this year?
Work-related expenses will continue to be an area of focus for us this year. We do analysis behind the scenes to look at occupations where we're seeing patterns of rising claims or where we're seeing claims that are outside the norm that we would expect for a particular industry. And this year we'll be focused on employee plumbers, IT managers and Defence Force non-commissioned officers.
So if you're in those three employee categories, be warned.
Yes, look, we have worked with representatives from the industry and we have written to people who on their last tax returns have indicated that they fall within those industries to let them know that we've got a guide to help them get it right, and we do as much as possible before they lodge their tax returns so that they can get it right.
What about for business? What tips do you have there?
Look, I think the main thing for business is record keeping is the key. The more organised you are, the better your records, the easier it will be for you to fill in your tax return or to provide that information for your accountant to fill in your tax return, and the less likely you are to make mistakes.
An extraordinarily high percentage of Australians use tax agents or accountants to prepare their returns. Given all the tools that the ATO offers to help people with tax, is that money well spent?
People have a choice whether they use a tax practitioner, and for many people, the relationship they have with their tax practitioner is much broader than just lodging their tax returns, and we want taxpayers to be able to exercise that choice. Tax practitioners for us are very important at tax time because they lodge by far and away the most tax returns for us. So we work with the industry to try and make it as easy as possible for them at tax time to be able to manage their workloads. But where a taxpayer does elect to prepare their tax return themselves, the role we play there is to try and make it as easy as possible for them to do so through having a range of products and our service such as eTax.
Well, you mentioned eTax there, and I know the usage of eTax is growing dramatically. How long do you think it'll be before most people actually use eTax and lodge their returns online?
Well, at the moment, the majority of taxpayers lodge through a tax professional, and tax professionals, generally speaking, lodge with us through their electronic software. So we're not looking to attract people away from tax practitioners. What we are focused on, I guess, is those people who are still preparing their own tax return and lodging on paper. And we know from some research that we have conducted that a significant number of those people are already transacting, for example, with banks, or they're making purchases online, but for whatever reason they haven't made the jump to eTax. So we're focused on trying to shift them and get them to have a go with eTax, and over time we hope to be able to transition more of those people.
Well, just finally, one of the tools the ATO has offered for many years is TaxPack, but you've laid TaxPack to rest this year. Why is that?
Look, we've refreshed the product this year. Over the years, we've found that the numbers of people using that product has declined as more people shift towards eTax. And we found from analysis that a lot of the information that's contained in the product wasn't necessarily representative of the people who are now using it. So we've shifted some of the more complex information that relate to more complex tax affairs or less common circumstances onto our website, and the product is now streamlined for the people who use it.
And that streamlined product, it's known as Instruction for Taxpayers. Where can people get it?
People can get it as they usually can through most newsagents around Australia and from ATO shop fronts, or they can order it from our automated product ordering service.
Elaine Anthony, some very good information there for our viewers. Thank you very much for your time.
My pleasure, Andrew.
Well, this is a big year for the tax system with the introduction of the carbon tax and the mineral resources rent tax, as well as a raft of changes for personal tax returns. There's also a number of measures for small business, as tax expert Adrian Raftery explains. Adrian, it's tax time again, so what should small businesses be doing to get their tax affairs in order?
Well, the very first thing is to get all their receipts in order and get their systems in place. So if you do have some type of accounting software, if you can download all your transactions onto your software program and get it in order in shape for your accountant. So you'll probably be making contact with your accountant very shortly, because you've got a BAS to do later on next month. So you want to be as efficient as possible so you can focus on making profits in the coming year.
What are the biggest mistakes you see from small business when they're preparing their tax returns?
One of the bigger things to find is they don't have all of their records up to date. So they're probably missing out on a lot of simple things. And it's important in terms of their recognition of revenue. So if they operate on a cash basis, they only have to pick up the amounts that they actually received in the bank for that quarter. Now, if they may have incurred a lot of expenditure, but they need to also, on a cash basis, they can claim the GST on the actual payments that they've made. So at the end of each quarter, they should be paying all of their expenses to make sure that they get the GST straight away.
And lastly, the government is bringing in some changes for small business, which will be a real benefit in the coming financial year. What are they?
There's a lot of changes there that came out in the recent federal budget. Probably one of the biggest ones was there is no change in the company tax rate, so it's still going to be 30%. They also introduced a carryback tax losses. So you may have made a profit this year and have to pay tax on it, but for next year, if things are a bit tough, you can claim back the tax that you've paid, provided you've got enough of franking credits in next year's tax return. Now, for some people, you may have not done enough of tax planning for the 30th of June 2012 year. Don't sweat about it, because you probably won't have to lodge your tax return until 15th of May next year. And if you're running at a loss, you've only got a 6-week period before you can claim back your losses from this financial year just gone.
And also for small business, I think if you spend up to $6,500, you get an instant write-off on new assets.
From the 1st of July, if you've got a new business asset of less than $6,500, you can claim back automatically in next year's tax return as a 100% write-off as for depreciation. Now, previously it's been only $1,000, so it's an incentive for you to go out there and to buy some assets and claim them straight away, which will otherwise be depreciating over a number of years. Now, if you're registered for GST, you can factor in the GST uplift. So it's really $7,150 is the price point that you can look to buying a new asset, claim the first $650 back in GST in your quarterly BAS, and then claim the last $6,500 in next year's tax return.
And increased write-offs of vehicle purchases as well.
Yeah, and in relation to new vehicles, the first $5,000 for a new vehicle that's used for your business, you can claim that as a tax deduction next year, plus the remainder of it, you can depreciate that as well. Now, a little caution with that is that if you do buy a car for your business, you may have some fringe benefits tax.
Once again, some good things there, Adrian. Thank you very much for your time.
My pleasure, Andrew.
What Adrian Raftery didn't say is that the government's tax changes for small business apparently aren't as generous as they seem. One of the biggest changes is what's known as carryback losses, where businesses can claim current year losses against past year profits and claim a tax refund. But most small businesses won't be eligible.
This measure only applies to small businesses that are structured as companies. The vast majority of small businesses in this country, around about 2.5 million of them, are structured in vehicles other than companies. They are structured as trusts, partnerships, and in many cases sole traders. And all of those structures would stand to miss out on the opportunity to access this loss carryback regime.
In fairness to the government, it says it would like to extend the carryback losses to all small businesses. However, it says it took advice from its business tax working group when framing the legislation. Well, if there's one thing many businesses are sweating on, it's the Australian dollar falling back to its long-run average of between 75 and 80 US cents. But is that going to happen in 2012? At the start of the year, we asked a group of economic experts to forecast where they thought the dollar would be at the end of the year. Here's their latest thoughts on those predictions.
We've shifted that currency forecast up slightly to $1.05 against the US dollar, mainly because of weakness or further weakness in the US dollar, and we think that's the more likely profile for the end of this year. It still looks like US interest rates will remain pretty close to zero, and if anything, there's still some pressure on the central bank there to do more of that liquidity arrangements. It should keep their currency quite weak.
I still think that's not a bad round number to go for. Once again, if I'm wrong on that, I think the currency will be below 90 cents, not above. And the key there really is we've got this sense of global growth slowdown. Recession in Europe, slowdown in the US, and of course slowdown in China and the rest of Asia. We're seeing commodity prices come off. I think the Aussie has got further downside. We need to get further downside to get to 90 cents. It may go through 90 cents.
I still think we're going through a period in our economic history where the dollar's going to be strong, and we're going to be exporting to Asia, buying online from the US and taking our holidays in Italy rather than domestically. I think the dollar could not quite be $1.07, it could be $1.05, but I still think it's going to be above parity at the end of the year.
We're still reasonably comfortable that the Australian dollar is going to hang around in that sort of 100 to 105 range over the course of this year. We have lowered our forecasts a little bit down to around parity at the end of the year, and that's partly related to the RBA cutting the cash rate a little bit more than we thought, but we're reasonably comfortable with around parity to around 105.
If China's economy and economic growth, if that keeps on decreasing like it's predicted to do, I think our exports won't be as strong, and that will bring down the Australian dollar. I think by end of the year, it will be below US parity and it will be around 95 US cents.
We also asked our experts to make predictions on the stock market, unemployment and interest rates, and you'd have to say at the halfway mark, the students from Luther College in Melbourne are giving the professionals a real run for their money. Well, that's it for this tax-based edition of the Finance Quarter. If you'd like to see any part of the program again, you can find us on the ABC News website. Just go to the business page and click on the Finance Quarter icon. We're also on Twitter at the address on your screen now. Thank you for watching, and we'll see you next time on the Finance Quarter.